The stock market's designed to take the least amount of people with it in a bull market and to recruit and take with the most amount of people in a bear market. That's why we have bear market rallies. That's why in bull markets we have shorter, quicker falls to scare people out. What's going on today is really a symptom of what happened up until COVID of 2020. And people are continuing to expect the market to go back to how it was, and it's not going to go back. And that's what's creating the anxiety and the worry and the loss and the frustration and the stress and the sleepless nights. But it doesn't have to be that way. So in today's video, I want to talk about what changed, why it changed, and why people believe what they did believe coming into this year. How about that for a mouthful? Okay, stick around. We're going to cover that and so much more. Hey everybody, this is RC Peck with Fearless Wealth, and this is my weekly update. And I want to get to the charts and talk about what happened up to March of 2020 and now what is happening today. It is very different. And this one reason I'm going to talk about today is really the reason why people are having a lot more pain in 2022 than they ought to be having. And partially it's not their fault. It's what the market does to people. So let's pop over and let's look at this price chart right here. Okay, so this is just the S&P 500 with dividends reinvested. This price chart goes back to September of 2014. So we've got a good amount of time here. We're looking at about 6-7 years. Let me actually see how much time we're looking at here. About 6 or 7 years. And this is a weekly price chart. So each little dot, which you cannot see because they're all strung together as a line, represents a week. This is what I want to show you. Back in 2015, the market fell, but it only fell for about 2 months. Now, each period on here is a week. So 7 periods, I'm rounding, 8 periods, about 2 months. So the market fell 2 months, and then it stopped falling, and then it fully recovered. And then when it fell again, it fell for... It's 10 periods, that's 10 weeks, so call that 2.5 months. Okay, then we go and fast forward to 2018, where the market didn't fall that long. This was when Trump tweeted out that he was going to do a trade war with China, and the market fell for, I'm going to have to put my glasses on, everyone. It's happening. 8 periods, so it fell for 2 months. Right, so think about what we have right now. Market fell 2 months, market fell 2.5 months, market fell 2 months. Now we go into Powell, the market telling Powell to not raise rates anymore. The market fell for 3 months. And then we have the COVID crash where the market fell for 1 month. From there to there, it fell for 1 month. So coming into 2022, when the market corrected, it would correct for 1 or 2 months, maybe for 3 months. Then it would stop falling, and then it would slowly, consistently, methodically get back up to new highs. People were taught to think this is how it works. The market just falls 10 or 15, maybe almost 20%. And then that's it. It's over. Let's move back. Let's start day trading, whatnot. That's not what is happening today. What's happening today is something that happened in 2008 and 2000 and 1974. So this is a protracted fall in the market, right? We are in our 9th month of the market falling. And people are not used to this. Now, in 2019, free stock trading hit the world. Even before 2019, it was like $4.95 a trade, but it was enough friction that people were not day trading like they were, or like they started to do in 2019. We saw Robinhood start, and then we had the pandemic in 2020 where everyone was home doing nothing with their checks from the government, and they were day trading, and there was almost no friction in doing that. So people were expecting fast, quick corrections. They'd drop, they'd turn around, they'd go back up. And that is not happening anymore. Today, this is what the market looks like. So here on the screen where my gray vertical line is, I'll just put the crosshair up at the top too. That's the beginning. That's actually December 27th of 2021. But here, from that peak to the trough right now, that's 24 weeks. Right? Also known as 6 months. Now, I believe this market, the S&P, is going to come down here and test pre-COVID highs. It wants to come down there and see if there's still buyers there. That means from where the market is, again, this is a weekly price chart. So the week is not closed out yet. I'm recording this during market hours on Thursday. There's still about another, I'm squinting here, 18% down the market could fall. This is the S&P when I say the market. And again, it wants to come down here. Investors, because after March of 2009, they've not been taught to expect 6, 7, 8, 9, 10, 12, 14, 16, 18 months of a market fall. But that is what I believe we have entered, this prolonged or protracted or bear market where the world is unstable, the markets are unstable, and people over time are saying, you know what, I don't want to be in the market. And if I have to be in the market, I guess I'll be in utilities. I'll be in some part of the stock market, but just because I have to. Now, I'm not sure who's telling them they have to be in the market. Actually, I do know who's telling them. It's called the big box advisor world. They're saying you've got to be in the market at all times, every time. And so what happens is people start looking to the other parts of the stock market. They're like, oh, these parts are safe. And that's why you often see a rush to the safe parts of the market before the market really fully falls. And that's what's started to happen with utilities. So what we have here, let me go over here and just get this. So what we have here is an entire, I don't want to say an entire generation because it's only about 12 years, but maybe for an investment or investor generation, whether you're investing your own money, definitely if you have a big box advisor investing your money, is you have a long only approach. You have an approach that only works if the market's going up. That's great if the market is happy, right? So big box advisors have approaches that only work if the market's happy. There are shorter periods of time, about 15% of the time, where the market is very unhappy. And that's where you get these 50, 60, 70% kind of wipeouts where people lose literally half or more of their stock market wealth. But it doesn't have to be that way. So I believe we are in one of those. I don't know if we'll do 50% down, but I think the near term full drawdown is going to be around 35% on the S&P. For the NASDAQ 100, it'd probably be right around 45%. And I think as we move through the year, we're going to see the market continue to weaken and other parts of the market to continue to weaken, where literally the last safe investment is your investment approach. The last safe investment is never a symbol, is never an asset class, is never a sector, but it's actually your approach to investing. And that's a really important point to make on this video, probably the most important point. But right now, the only symbol or asset where people are flooding into is US dollars and energy and or commodities. That's not good for the investment world. So to wrap this up, there is definitely signs, and they're not too subtle, that the market is saying we're going to be in this for some time. Again, market peaked at the beginning of this year. We are halfway through September. So that's 8.5 months in the books of the market falling. And the longer the market stays down and falls, the longer it's going to stay down and falling. Thanks everyone for being in my world. I appreciate the comments. I appreciate you watching this. I appreciate you sharing these videos. Let me know where you think I got it right or where I got it wrong or what you think I'm not talking about. And if you are curious about what a portfolio looks like that is what we call market-based, right, and not age-based or risk tolerance-based, the easiest next step is to just get on a call with me and we can talk about that. Thanks everyone. Again, I will see you on my next video. Okay, bye.